seems as though the Kenyan currency is still battered despite the CBK's moves to tighten monetary policy further.
Yeah, we've seen that, like I've always said, for our currency, it's a horse that has already bolted. Really, I think we require more firm action of the range that was taken in with the MPC in their last meeting. So we require such kind of actions more and more, but again, firmly and at a higher level.
All right. Meanwhile, we've been looking for indications as to policy measures to stabilize the shilling, and we're told status quo prevails. They're going to leave it to the market's devices, a floating exchange rate.
Well, our policy has always been to leave it at a floating exchange rate. I don't really think that that controlling it, that putting it at a fixed, fixing the exchange rate will be of much help. It would actually go against our tenets of a free economy. That would be very radical at this point.
All right. Now, the CBK seems to be in a bit of a catch-22. Raise interest rates to try to buffer the currency, to try to tame inflation, but at the same time asking banks not to raise their own lending rates significantly so as to spur growth. I mean, the wisdom in all of that?
Well, moral persuasion has always been one of the tools available to the CBK. I think they're in line to request banks not to do that, because basically that is one of the tools available to them.
All right, but would the banks comply? I mean, after all, their operational costs are rising. They can't even benefit from the forex trade because of the significantly depreciated shilling and the fact that there's now a parallel market where they're supposed to make their money. How are they supposed to sort out their margins?
It all depends in what is in it for them, because as a businessman, at the end of the day, we look for profits as much as there are other issues concerned. So really, honestly, I do not see a situation where banks are going to strongly toe that line.
Yeah. Okay. Give us a sense of the Kenyan economy and how battered the consumer feels at the moment, because we do know that growth is at about 4.1%. It's a decline, but it's still a fairly good performance when you look at global averages. So to some extent, something's working in this economy.
Well, in any economy, there are always pockets of sectors that are making money. Tourism figures are looking good at the moment. Although inflation is still up, but well, we've got the tea sector doing well. Basically, there are a few pockets of the economy that are doing well. I would agree with you.
All right, looking at the equity side, obviously the big news for the week was going to be the Precision Air IPO and the dilution of Kenya Airways' stake in the company as it goes public. What does that mean for KQ? We have seen its shares looking a lot more attractive for the investor because they've got so many plans underfoot.
For Kenya Airways, as we head towards the book's closure, we are bound to see the stock coming up. But then again, on news of the stock will be affected by two things: the Precision Air and the impending rights issue, both of which will greatly determine an investor will have to consider if he is to invest into KQ.
All right, other market movers, even if the share price hasn't gained, has been a stock like East African Breweries Limited. There's been a lot of activity at that counter in the recent sessions. Why is that?
Really, that's mostly foreign traders. I think they're about to release their interim results at the moment. That's what I believe.
All right.
But then again, also at that price, it's a bit underpriced.
Safaricom, what's going on here? Because it is the foreigner's darling. It's still very much trading within the new psychological range of 365 thereabouts. Tariff increases to try to at least support their margins from inflationary effects. But, you know, are you confident that Safaricom can continue to grow under these market conditions?
Oh yes, Safaricom has always held at those prices. I believe that's their psychological mark. Raising the prices, it's a good thing for them because going forward, I don't see many of the subscribers pulling off. My economics tells me that it's going to take a little while before subscribers react.